Welcome, and thank you for joining us today. I am Talitha Batts, the Director of the Policy Center at the North Carolina Institute for Minority Economic Development, located in Durham, North Carolina. We're excited to have Ms. Kimberly Pierce-Cartwright joining us today as our moderator. Kimberly is the Director of News and Public Affairs at WNCU 90.7 FM, a station of North Carolina Central University. Kimberly, we're so excited to have you today as our moderator. Thank you so much for joining us.
You are so very welcome, and thank you very much for including WNCU 90.7 FM as a part of this process on this exciting platform that we have for virtual conversations. It's my good pleasure to be here.
Thank you, Kimberly. If you could tell us a little bit about our purpose and kickstart our conference into our first speaker.
I will. We have a full slate of guests today, audience, and we're going to get updates about the impact of COVID-19 on small businesses in North Carolina. It's been a struggle for businesses, not only in North Carolina, but around the world. And joining us today is Thomas A. Stith. He is the North Carolina Director of the U.S. Small Business Administration in Charlotte, North Carolina. He'll bring news about his agency and how they're working through the process. Also today is Kevin J. Price, President and CEO of the North Carolina Institute of Minority Economic Development here in Durham, North Carolina. And he's going to talk to us about what's happening in the Institute and the result of the survey, the impact of COVID-19 on small businesses in North Carolina. And we look very much forward to hearing that. Barry Ryan is joining us too. He's the Vice President of the Rural Center, and he's going to talk about the North Carolina COVID-19 Rapid Recovery Loan Program. Monica Edwards is a business owner. She owns Moorhead Manor in Durham, North Carolina. We'll talk about her business and her receiving small business loans funds. Also, B. Cote works with the organization Impact Domestic Violence. She also received funds, and she'll talk about her experience as well. Now, let's start our presentation with my good friend, Mr. Thomas Stith. And again, he's the North Carolina Director of the U.S. Small Business Administration in Charlotte, North Carolina. And as a director, he oversees an office that drives economic development to assist local entrepreneurs starting and growing businesses. He also directs the implementation of SBA programs related to assessing capital, business advising, and government contracts. Hello, sir. It's good to see you again.
Hello, Kimberly. It's great to see you as well this morning, and just want to thank the Institute and North Carolina Central for collaborating for this very timely event today.
Yes, sir. Give us an update about Coronavirus Aid, Relief, and Economic Security Act. And it's the CARES Act. And we know a little bit about that from the last time that we saw you. So what's been happening to small businesses in the state as a result of funding from that act?
Yes, Kimberly, and I'll go through a couple of slides in just a moment, but just want to reemphasize that, as you mentioned, SBA's role in North Carolina is to ensure that we're providing adequate support to over 900,000 small businesses in the state that employ 1.7 million people. So our small businesses are a key component of our communities. SBA has been very engaged prior to COVID-19, helping, as you said, start, grow, and expand businesses. We're working diligently through this pandemic and will be a strong partner as we work toward restarting our economy. I'll just take a moment and go through a few slides just to share some of the results and highlight a few of our key initiatives. And just as a check, you can see a full blue screen?
Yes, sir.
Okay, great. Now, I'm going to highlight two significant initiatives and want to mention a third that were a part of the CARES Act. Many people are very familiar with the Paycheck Protection Program that is designed to provide financial assistance to small businesses and nonprofits, first and foremost to help them retain employees, to provide an opportunity for people to stay employed. The Small Business Debt Relief Program is designed to provide financial support and relief for existing SBA customers. Those that have a 7A or 504 loan, they have their principal and interest deferred for 6 months. SBA actually pays those payments. So for existing SBA loan recipients during this time period, they get financial relief through the Small Business Debt Relief Program. The third component, which actually launched before the CARES Act passed, is our traditional response during a recovery, and that's the Economic Injury Disaster Loan. The EIDL, as it is called, became effective in North Carolina on March the 18th. It provides a loan for operating expenses, and also after the passage of the CARES Act, had an accompanying grant associated with it. But let's talk a little more in detail concerning the specifics of the Paycheck Protection Program and the results that we've seen from its implementation. First and foremost, I'd like to say that there is still funding available for the Paycheck Protection Program. Over $100 billion remain in the Paycheck Protection Program. There's a deadline of June the 30th that applications will have to be submitted to lending institutions. So we're really encouraging small business and nonprofits that have not participated yet in the Paycheck Protection Program to do so, to check with their local lender, bank, credit union, fintech organizations are still available to provide access to this initiative. In North Carolina, over $12 billion have been provided to small businesses throughout the state. That's over 116,000 loans. We also know from a national perspective, a part of the strategy for the Paycheck Protection Program was to ensure our smaller businesses and nonprofits participated in the Paycheck Protection Program. So as you can see, we had significant participation from minority depository institutions nationally, and clearly here in North Carolina, and community development finance institutions. We are still seeing benefits from that in the second round of funding. There was a dedication of $60 billion to smaller asset banks and financial institutions, and then most recently a $10 billion allocation to CDFIs in an effort to ensure that we saw a diversity of participation in the Paycheck Protection Program. The key component, as we've discussed over the last several weeks, is that the Paycheck Protection Program has a forgivable clause. The most recent passage of legislation really assisted in this forgivable clause component. It provided flexibility, and it's literally called the Paycheck Protection Program Flexibility Act. And there were three major changes. One, the cover period for review of forgivable, the forgivable nature of the loan was expanded from 8 weeks to 24 weeks. So that was a very significant change to provide small businesses the opportunity for a longer term to actually expend the funds. And also the percentage calculation for dedication of those funds to qualify for full forgiveness is now 60% would need to be dedicated toward payroll costs, and 40% for other allowable expenses such as rent, utilities, and lease payment. So this provides the small business more flexibility than the original 75-25 allocation. And then also those loans made after June the 5th, if there is a remaining balance after the forgivable clause is implemented, that can be financed over a 5-year period versus a 2-year period, and again at 1% interest. So the update with the Paycheck Protection Program at this point, additional flexibility after the 2020 Flexibility Act passed on June the 5th, and also a key component is the remaining funds, over $100 billion still remaining, but the time is very short now. So for those institutions, both small businesses and nonprofits, we really encourage you to reach out to lenders now because applications will have to be approved by June the 30th. The other initiative that we mentioned earlier is the Economic Injury Disaster Loan and its accompanying grant. After the passage of the CARES Act, there was a $10,000 potential grant for small businesses and nonprofits. This would be requested as a small business applied to SBA. These are direct loans with SBA. In contrast, the Paycheck Protection Program loans are direct relationship with your lender or fintech organization. The economic injury disaster loan is utilized for general operating expenses. It could be up to 30 years, as we've mentioned, and at a rate of 3.75% for small businesses, 2.75% for nonprofits. Some of the most recent changes was the addition of agriculture concerns being eligible for the economic injury disaster loan, and also a reopening of the portal for all small businesses. There was a pause in the new applications with the second round of funding to allow agriculture concerns to participate. Now, within the last couple of weeks, the portal for new applicants for the economic injury disaster loan and the advanced grant. And once again, that is a grant. Typically, it will be $1,000 per employee, up to $10,000. And again, we encourage those small businesses who have not participated to take the opportunity now to participate in the EIDL program and the accompanying grant. So far here in North Carolina, almost $3 billion, $2.6 billion has been approved for small businesses for the EIDL loan, almost $317 million for the advanced grant. So significant financial support from these two initiatives in particular, and we are just encouraging small businesses and nonprofits, in particular with the PPP. While there are discussions ongoing, there is existing funding now with the PPP, so we encourage in a have a sense of urgency to pursue that initiative if that is applicable, and certainly the economic injury disaster loan and the accompanying grant. And now with the reopening of the portal, new applicants can take advantage of that. So with that, I'll pause and certainly look forward to the presentations from our other excellent guests today.
Thank you so much for that very valuable information. We certainly appreciate that. Also today, our guest is Kevin J. Price. He is the president and CEO of the North Carolina Institute of Minority Economic Development here in Durham. The Institute is a nonprofit management consulting and services firm focused on business diversity and inclusion. And Mr. Price is going to talk to us about what's happening at the Institute and the result of the survey, the impact of COVID-19 on small businesses in North Carolina. Hello and welcome, Mr. Price.
Well, good morning, Kimberly, and thank you for the introduction.
You're welcome. You can go ahead and start your presentation, sir.
Well, thank you. So as usual, Thomas and I like to joke about the fact that I usually follow him. So I have the pressure of trying to be as flawless as he is with his presentation. So y'all bear with me if I don't get quite as smooth as Thomas. So I'm pleased to be here this morning and share some information with you about some updates about what we've been doing at the Institute, particularly around engaging and understanding what's happening, the impact of what's happening to small, diverse businesses. So as you all know, the Institute, it has been in place since 1986. And let's see if I can advance my slide here. There we go. We've been in place since 1986, and our real role is to build the asset base of diverse communities throughout our state. So that's really why we exist and what we're here to accomplish. And we do that through a host of programs that participate with us in a number of capacities. Small Business Transportation Resource Center, 2 women's business centers, one in Charlotte and one in Durham, the Policy Center, which is responsible for this event today and gathering the data that you all will hear in just a moment, And then Public Allies is our way of engaging with other nonprofits throughout the state and providing additional resources to them who will gain job skills and readiness to engage in the workforce. And so as we think about just what's happening around the state as it relates to COVID-19, this is really our second edition of the survey. The first one was back in March. And I'll tell you, I started March the 9th, and I thought I was going to have a wonderful honeymoon of coming in and getting to know the team and understanding policy and all of those things and the board. And it's really been a baptism by fire. I had roughly about a week and COVID-19 hit. So we closed the office and started working from home. But it was really important to understand how COVID-19 was impacting small, diverse companies across our state. So the coalition that we've convened is there on the right. And that represents a cross-section of diverse businesses throughout our state. And I'm incredibly appreciative of all of them for participating in the survey, because it's important that we understand what's happening to diverse suppliers across our state. And so having said that, we developed a survey, we sent that survey out, and we received responses from the survey that were actually a bit surprising. They were different than the first survey we conducted back in March, and I'll share some of those differences with you. I'd like to start first by saying that one similarity with the previous survey was that most of the companies who responded are sole proprietors. And that's important to note. 92% of them are sole proprietors who responded. The difference of that other 8% represented nonprofits who also responded, because what we were hearing was that nonprofits are also being impacted by COVID-19. And there was a lot of emphasis around small, diverse businesses and others, the business community, but not that much emphasis around what's happening with nonprofits. So we wanted to understand what was happening there as well. 87% have 10 or less employees. And that's an important distinction, because we see that as a national trend that diverse businesses tend to be very small, actually most under 5 employees. And if you include the principal or the owner of the company, in many cases, that is the sole person in the company. So that's an important distinction. Before, our results were at 90%. So we're seeing this shift now from 90% to 87%. That delta there of 3% is larger companies that are responding to the survey for the second edition. We also noticed a similar trend as the first one, in that more than 50% of the businesses are over 5 years old, which is encouraging, because that tells me that these are long-standing companies. They have longevity and experience. These are not startups and new businesses by any means. We also learned, as we looked at the industries that responded to the survey, you see that at the top right there, that 51% of them represented health and human services, retail, education, and a new one that came in was manufacturing. We didn't see that the first round, nor education actually. They didn't register as high. So those are two that we started to see this time. We also, one difference between this one and the last survey, real estate and construction was on the right side, and it shifted to the left side. So that 49% represents the real estate and construction industry, as well as professional services. Professional services, I'm not surprised by that, because if you think about it, for many small, diverse companies, you will find them in those areas where the cost of entry is very low. So not as much cost in terms of bricks and mortar and having factories, for instance, or hotels with the exception of Monaco. But you will see everyone else generally tends to be in the lower cost of entry professions. And so that bottom bubble there indicates that 93% have experienced some loss of revenue up to 30%. Now that is alarming to me because it is quite different than the first survey. The first one said that 62% had experienced a loss of revenue up to 50%. So a big difference we're noticing here. And some of that may be because these are larger firms that are responding to this survey versus many more smaller firms responded to the first survey. You'll also notice, now I'm going clockwise around this middle, these bubbles here, but the next one talks about 84% are still operational. That is really encouraging to know. But there's a pin that you put in that 84% because 60% have not experienced any layoffs. That means 40% have. That's a big distinction. 40% have started laying people off or noticing some significant impact to their business. And so it was important for us to understand then how much runway do they have now? And before, the March survey told us that roughly about a third of the businesses who responded had about 30 days worth of working capital before they either started laying people off or they closed their doors permanently. Fortunately, what you heard from Thomas was that SBA has put a significant amount of funding on the street through EIDL and PPP, which helped push that runway out to now, actually. So if we think about it, the first survey was published March the 26th. It told us that those companies had 30 days worth of working capital, but within that 30 days, the first wave of stimulus hit, which pushed us out another 2 months, which would be the end of this month. So this is when we will start to see just what kind of impact many of the companies are starting to see after June. And so it was important for us to dive a little deeper into that and understand what was really happening. How much runway do they really have? And so that bottom right graph starts to dive into that information. And it was quite interesting to me because it gives a much longer runway than 30 days. And some of that may come from the fact that we have larger firms that are responding. We are also seeing them access some of the funding from SBA and other sources. So let me share some data with you about some of those other sources. Because unlike the first survey, we have now had time to just gauge what's happened with some of those small diverse businesses in terms of being able to access PPP as well as EIDL and local funding. And so more than half received some SBA funding. That's encouraging. And I think that's in line with the information that Thomas shared a little earlier. What's also interesting is you'll notice there 62% received some type of EIDL grant of $5,000 or less. So these were small amounts that they received as EIDL grant, even though it could go up to 10. 42% received the EIDL loan of $10,000 or below, and then 33% received PPP money of $10,000 or less. So a broad spectrum there of what we're seeing. And if you look at that bottom right graph, you can see how that really shows up. Most received the PPP money, and there was a lot of emphasis there, particularly with small businesses. Then the EIDL or EIDL loan grant was followed that. And then what I suspect other is state funding or local or municipality funding represents that 2%. Where I think there's a whole lot of opportunity is with community development financial institutions. So I was excited to see the slide that Mr. Stith pointed out of some of those funds being directed to community development financial institutions, because they are on the ground. They know those small, diverse businesses that still need help, and they can get that funding to them quicker and to the right people. So moving some of those funds to CDFI, I think, is the right way to go. And so then the top right talks about some of the funding levels from the PPP perspective. And no real surprises there, but I thought it would be interesting to just point that out and share some of the data with you. And so there were some recommendations that came out of the survey as well. In this particular instance, you'll see here, we had 5 recommendations versus 6 before. And the first one that talks about greater utilization of grassroots nonprofits, community economic corporations, and community development financial institutions to disperse more of the funds to support those diverse suppliers and companies. So I'm encouraged by that with Mrs. Stith's presentation. And the development of easier or faster access to localized grant resources from a whole host of sources. There's a lot of emphasis being placed on loans and not necessarily as much on grants. And if you think about it, what we've experienced the last quarter is lost revenue that won't return. So what we're asking these small companies to do is receive a loan and repay a loan potentially on lost revenue, which, if we're not careful, could set these companies up for significant challenges later down the road. So it's important that we have more grant resources available as well. And then the third bullet there talks about greater creativity and engagement of corporations committed to addressing these challenges that we see. And that could be in a number of forms, whether it's procurement term alterations or more donations that they put on the street, or investments in some of these smaller grassroots organizations that are engaged within the community. The fourth one is intensify efforts by chambers of commerce, corporations, and local stakeholders to engage diverse suppliers via mentorships and capacity building. And I've spent some time recently talking with some leaders of supply chain corporations, and what they are realizing now is there's been way too much emphasis over the last few years of procuring goods in particular from overseas. And many of them are rethinking that business model. We've seen a lot of disruption in the supply chain in the last few years. So to mitigate that disruption, they're now looking more stateside. And I think that creates an opportunity for diverse suppliers to play a bigger role in supporting supply chains of corporations. The last one is encouragement of local citizens to be intentional about buying locally to support diverse companies. And I'm encouraged by that, because that was one of the recommendations from the first survey, that we have more of an intentional emphasis around buying small and buying local. And we're seeing some pockets of that across the state. Charlotte's a good example of local citizens looking for local, small, and diverse suppliers that they can buy goods and services from. Even if they don't get the service or good today, they want to support those companies. And so the previous recommendations, even though there were 6, there were 3 in addition to the buying local, buying small, 2 more that I'm excited about sharing with you. One was designating construction as an essential industry. And the governor picked up on that on the last survey, and we saw some movement with that. So you'll notice construction continued to move, even though we've had a stay-at-home order across the state. And then launching or encouraging companies to tweak their payment terms. I've been encouraged to see companies respond to that by getting payment to their small suppliers faster than in the past. You know, some companies can push their payment terms out 60 to 90 days. And in this kind of economy, that could be disastrous. So I'm encouraged by seeing that happen. So what next? We have these recommendations out there. We are seeing some movement in terms of responses to the recommendations. I think that's the next step, is more emphasis around actually acting on these recommendations and getting in and doing what you can. You may only be able to impact one of these recommendations, but that still moves the needle and moves us along and can make a significant difference in the lives and the longevity of businesses across the state. So I just wanted to share that with you. I hope this has been helpful and informative, and we will continue to do this every quarter so we can see just what's happening on the ground and get this information to foundations and corporations and government leaders across our state so they can respond with the right type of policy to support small and diverse companies around our state. And so I'll pause there for any questions or comments.
Well, we thank you very much, Mr. Price, for your hard work and that very valuable information. And as we move along, the next guest is Barry Ryan, and he serves as the president of the North Carolina Rural Economic Development Center. He's led initiatives in rural business, small business, lending, workforce development, economic engagement, leadership development, and disaster recovery. And I'd like to say a hearty welcome to you, Barry Ryan. How are you?
Great, thank you so much. Pleasure to be here with you all.
Very good. You can start with a background, a little bit of your background, and then you can also start your presentation when you're ready.
Sure, thank you so much. Really appreciate the Institute hosting today. Appreciate the partnership that we have and how we are working together for this rapid recovery program to serve businesses that are affected by the COVID-19 disaster. I'll give you all a little bit of background. The Rural Center, we're a private nonprofit. We're based in Raleigh. We have an emphasis on serving rural communities across the state and work statewide to serve small businesses. So the rural communities we serve, that's an 85 county footprint. And then for the small business programs that we run, most of those are 100 county programs. So that's all 100 counties in North Carolina. I want to talk to you all today about our North Carolina Rapid Recovery Program. This is our response to the COVID-19 crisis and pandemic and helping to serve businesses that have been affected. So I'll walk through a few slides, and then when the time is appropriate, happy to help answer questions as well. The Rapid Recovery Program, a special partnership of a number of funders, the two big ones there being the Golden Leaf Foundation as our initial investor, and then the state of North Carolina putting in funds to support small businesses that are affected by the COVID-19 pandemic. Really important to emphasize here, and to Mr. Stith and Mr. Price's point about CDFIs and other community-focused organizations. Our partnership is one with 8 different lenders that are serving small businesses that are affected by the COVID-19 pandemic. So those lenders are organizations that have at the core of their mission serving businesses that would otherwise have a hard time accessing capital from traditional partners like banks. So those partners you can see listed here. Hopefully some of those are names that you all are familiar with. And big emphasis on building a diverse team in order to meet this crisis, both with the scale of it, but also making sure that we have organizations that have a focus on serving all different types of businesses in the state. So we have 2 lenders that are African-American led. We have 1 lender that has a specific focus on serving the Eastern Band of Cherokee Indian Tribe. And then we have 1 lender that is also female led. So we have a diverse group of lenders and really a strong team to help us meet the demand that we're seeing from businesses that are affected. To walk you through the product here, the COVID-19 Rapid Recovery Loan Program is designed to help businesses that have experienced that loss of revenue, that downturn in sales, maybe had to shut down, and we're able to serve those businesses by providing them with a loan. To Mr. Price's point, I think it's a very good one. What we're seeing is that it's a very challenging environment for businesses, even getting access to capital through debt, and longer term solutions will need to think more creatively. Really, the design of this program is to help folks get access to those resources now, while other conversations are being had about longer term solutions for businesses that have been affected, that have experienced those losses in revenues. A little bit about the program. We offer loans up to $50,000 to businesses that have been affected by the COVID-19 pandemic. Those loans are 6 months, no payments, and very low interest, followed by a 48-month term of principal and interest payments in order to wind down that loan. There are no prepayment penalties, and want to emphasize again that this is a loan program. One of the things that we're proud of is that we're serving very small businesses through this program, and we are reaching an audience that we think is critical to our state and to our economy in order to get them access to these funds. That does mean two things though. It makes it a little bit harder for our lenders in terms of going through the underwriting process, making sure the business has the ability to repay, and then also focusing on making sure that we structure these in a way that the business is able to pay back the funds and we have a sustainable situation. We're serving businesses, and we've really structured this so that we can serve businesses that have at least one employee. So that could be the self-employed owner. So when we heard those survey results that many of those businesses were sole proprietors, that's certainly an audience that we're serving. But we are distinguishing that self-employed owner as an employee, and then also could be up to 100 employees. What we found, and I'll show in our data, that 72% of the businesses that we've served have had fewer than 10 employees. And we're looking for businesses that were in operation before the COVID-19 crisis began. So no startup businesses. Some other keys here, just because this is a loan program, if you do apply, be prepared to go through a bit of an underwriting process and work with your lender to help make sure that you're providing the documentation that they'll need to underwrite your loan. The other key here is that this program is designed to be complementary to some of the SBA products that are out there in response to the crisis. So it is perfectly acceptable for a business to receive the COVID-19 Rapid Recovery Loan alongside an SBA PPP loan. And then the one thing that we do ask, and the way our program is structured, is that if you receive our loan and you receive that EIDL EIDL loan, that we'd like to see those proceeds be used to refinance our loan or take out our loan. But otherwise, it's designed to complement and work together, and it's easy for a business to work with their lender on how to make sure that they're receiving and getting access to as much support as possible. I'll walk through a little bit about what we're seeing from our program's perspective. We also have had a flood of applications and interest. We know that this is truly a statewide disaster, and nearly every business is affected. We've had over 7,000 applications and over $200 million in requests. We have about $150 million in available funding, and what we know is that we feel comfortable that we still have adequate funding based on what we're seeing from the pipeline and the response rate of businesses that have applied. That average loan request is right around $31,000. As you might expect, heavy focus on retail and restaurant. Also, service-based businesses are a big part of the businesses that we're funding and are applying for the program. With the shutdown and the way it's impacted, especially those what we would call Main Street businesses, heavy emphasis on those ones that have a direct customer-facing business model. Want to walk through a couple stats about the loans that we've made, placing special emphasis to make sure that we're reaching those businesses that may have historically been underserved or don't have as ready access to bank capital. So two key measures here, and I'll walk through some specifics on my next slide. But special partnership between us and the North Carolina Hub Office to make sure that we're reaching diverse populations. And we're measuring that in a couple different ways. Here you can see those businesses that are female or minority owned represent 61% of our borrowers. And also a key metric for us, as I mentioned, is tracking the size of the business that we're serving. And this really shows you the niche of the program that we're operating to serve those very small businesses. 72% of our borrowers have fewer than 10 employees. Specifically on the demographics here, we've got a breakdown by race and ethnicity in comparison to the data for the state of North Carolina for employer businesses. So this gives you an idea that in most of the race or ethnic categories, we're either meeting or exceeding the statewide average, and we're doing a lot to try to improve this. We want to reach a very diverse borrower pool, and so special effort is being taken for outreach and also forming partnerships to provide technical assistance to those businesses that may need help getting through the application process. So lastly, I'll just walk through. We feel very good so far. This data is about 2 weeks old here, but getting the dollars out and walking through the application pipeline. Our lenders have all ramped up. Thread Capital, which is the lending subsidiary of the Rural Center, has actually added 30 temporary staff to help process these loans, as have many of our other lending partners. And we're at the point now where we wanted to be, which is doing about $5 million in loans a week. So shortly, we'll probably be exceeding that up towards $10 million a week and serving businesses at quite a clip. Our goal here is to make sure that we're reaching a business and a borrower pool that may not have had access to other funds. And so it takes a little bit more time to get there. It takes more time with the borrower, have to walk through and look at financials sometimes, bank statements, and that is a process, but it's a process that's worth the effort, in our opinion. I will stop there and be available if there are questions, and thank you all very much for the opportunity to be here with you today.
And Mr. Ryan, thank you so much for coming to be with us to share your information. It's certainly appreciated. Next, we have Monica R. Edwards. She is innkeeper and co-owner of Moorhead Manor Bed and Breakfast in Durham, North Carolina. She and her husband, Daniel, purchased the Cobb Tom's house, located in the historic Moorhead Hill neighborhood in 1997. They converted the 8,000 square foot 1910 colonial revival style mansion into a 5-bedroom bed and breakfast, and they also host events there. Mrs. Edwards, how are you?
I'm well, thank you, and thank you for having me.
Yes. Go ahead. We want you to tell us about your experience trying to secure business funding.
Okay. Well, I think like Barry mentioned, the lost revenue from COVID-19 is revenue that we'll never recover. Starting probably early March, we started losing reservations from international travelers that were not going to be able to come. And I would say by the middle of March, we had lost over $14,000 worth of reservations that we had on our book, and we were just ramping up. So our working capital was pretty much wiped out with having to refund deposits for those reservations that were being canceled. So the first thing I did when it was available was to jump on any type of grant or loan that was available. And probably after discussing with my accountant, the first one that I was recommended was to do the EIDL loan and grant, which was a very seamless application. By the time I applied, it was a small or the short form application. Applied within probably 3 weeks, I received monies in my account, which helped out a little bit. And then there was the waiting to hear whether or not the loan was going to be offered. And I would say probably within the next 4 to 6 weeks, I did receive a note from the SBA to go in and set up an account to see the monies that they were offering me. And, you know, looking at it and discussing it with my husband, one of the things we looked at, like several people have said before, as a small business person, the revenue that we've lost, we can't make up for that. So being in business for 23 years, we had to really do some thought pattern as to whether or not and what amount of loan that we want to accept. But the process in itself was very smooth for us. We continue to apply for grants that are out there because we think that we would really like to have grants, especially being in business for 23 years. We hope to make it to 25 and 30 if possible, but we'll see what happens with that.
So good luck to you, and thank you so much for sharing your information with us. Okay, moving right along, we have B. Cote coming next, and she is a social worker and an advocate who has worked exclusively with abusers for over 20 years. She is the founder of Impact Family Violence Services, which provides abuser programs in 5 North Carolina counties. Ms. Cote, welcome to our platform today.
Thank you so much for having me here. I really appreciate it.
You're so
yeah, so as Kimberly said, I'm a social worker. The difference between my human services kind of program and some others is that we are not considered a clinical program, which means that we cannot bill in that are available out there are designated for victims of domestic violence and not for work with the abuser. And yet, the abusers are the only ones who can stop being abusive. And so, we have to provide that service. We are also dependent on referrals from the courts. Although we do take self-referrals and referrals from DSS and Child Protective Services, most of our referrals, especially in my more rural counties, come from the courts. And the courts were shut down for domestic violence trials for 3 months. And in Mecklenburg County, they haven't opened back up yet and are not going to until at least July. Which means that as my clients are exiting the program, I have few clients coming in to replace those. And in the meantime, I have had to lay off my one 13-year employee who is a 1099. And so I've had to pick up on her hours, about 28 hours a week in addition to doing the work I was already doing. And you've probably heard that domestic violence has increased because of COVID-19. And so my clients are in crisis all over the place. I also have a nonprofit that helps provide scholarships for some of my clients, but my nonprofit is also not able to get any money in. We've been turned down for 6 out of 6 grants. There's just nothing else out there that we can even apply for that I know of. So my concern right now is when I can bring my employee back in, I'm not going to have the money to pay her to work enough hours to where she doesn't have to go looking for another job after 13 years. And I'm not paying myself right now. I'm working about 90 to 100 hours a week. And and there's just no money coming in. And I refuse to give up. I'm very headstrong, and I've hung in there through hard times. I started my business before the recession in 2008. I started the year before, and so almost lost it then too. But I refuse to do that because these clients and the victims are dependent on these services. So The other counties that I'm in case you're interested, the folks who cover the more rural counties, I'm in Union, Stanley, Gaston, Cleveland, and Lincoln counties. And in 4 of those counties, I'm the only state certified provider, and that's Stanley, Gaston, Lincoln, and Cleveland counties. So that's what I do, and that's what we are going through right now. Thank you very much.
And thank you very much for sharing with us. And we want you to stay strong in your business. Thank you, Ms. Cote. And now I'm going to turn the program over to Talitha Batts with the Institute. And we've just gotten, I would imagine, lots of inquiries about the loan process, the financial process of how to get information for your small business. Talitha, to you.
Sure. Thank you, Kimberly. We have had quite a few questions in the chat box, so please continue to keep them. I want to keep in mind that we are have some time restraints. So if we don't get to your question, then we will respond to your questions via our website. So just check back on the website at www.theinstitutenc.org. There for information in our resources section. So the first question is going to be addressed to Thomas. Actually, a couple of them, Thomas, so don't log off yet, right? So our first question is from Ms. Gonzalez. She says, is there a list of financial institutions that are still accepting these applications to share with small business owners? So is there a list out there anywhere that's a valid list that folks can see that are financial institutions that are still accepting applications?
Yes, and the short answer is yes. If they go to our website, sba.gov/NC, sba.gov/NC, there'll be a listing of banks, credit unions, fintech organizations that are potential pools. While SBA can't recommend a specific lender, we developed a list of those traditional lenders and then fintech organizations that are participating, and a few, not to endorse any, but my understanding earlier this week, Self-Help Credit Union was still participating, People's Bank, PayPal. So there are a couple of different type lenders, but we encourage sense of urgency, review our list that will give a broad pool and potentially check with a couple that I just named as suggestions, not endorsements or recommendations.
Understood. Now, is there a chance that the PPP deadline will be extended? That is another question. And also, will your PowerPoint be provided anywhere for download?
At this point, the current PPP program will conclude on June the 30th. There is discussion currently in Washington with Congress, SBA, and the Treasury, and all the key individuals on potential next round. But that's just a part of the debate now. So we don't have a firm commitment for additional PPP initiatives. So that's why we're pushing this sense of urgency with over $100 billion left to please to have a sense of urgency before June 30th, because that will be the end of our known program. And the second part of that question.
Will your PowerPoint presentation be available for download anywhere, either the SBA site or any other site?
I could certainly provide that to the Institute if that's appropriate. If you would like to send that to individuals or post on the website, we can do that.
Sure. Also, along with Thomas's website, the download for his PowerPoint presentations, we will also have a edited playback version of this call. It will be on our website at www.theinstitutenc.org in our resources section, and also on the Policy Centers page as well. We'll also be sharing this information in a recorded playback on our social media. So please check out our social media for this particular repeat of information as well. I don't currently see any other specific questions. There are lots of thank yous and thank yous to Thomas and Kevin, Barry, to Monica, and to B, all of our speakers. And if there are any other questions that may come up or that you all can think of, please feel free to contact me, Talitha Batts, at the Policy Center, and I'll be more than happy to help you at that time. Kimberly, I'm going to turn it back over to you to close out, and thank you so much, everyone, for joining.
This concludes our virtual town hall meeting. Thank you so much to the North Carolina Institute for Minority Economic Development for hosting this event. Thank you to our guests, Barry Ryan, Monica Edwards, B. Cote, Thomas Stith III, and we appreciate you guys for hanging out with us today, and we want you to have a great day.
Kevin, did you want to say a couple of things?
I did. I just wanted to thank all of our presenters. So Barry, thank you. I know it was a little short notice for you, and I appreciate you coming through wonderfully. So thank you for that. Thomas, thank you as well for doing a great job. Monica, B, I appreciate both of you coming on and telling your story and what you are dealing with on the ground. So that's very important that we keep that in front of us. So thank you all. Kimberly, thank you and your team for continuing to be a partner of ours.
Yes.
Thank you all, and have a great day.